Well, you know what's not in there. There's no cloud computing. There's no B2B workplace software, and there's no social media. And that's not to say that those stocks can't work, but clearly the quantitative work that they're doing suggests that given the environment going in next year, the stocks that'll work will be much more cyclical and much more reopen oriented. And we'll see if that ends up being right. But I do think it's been important to have that in your portfolio. Let's talk Disney. This is a stock that I think is the most emblematic of the frustration of the bears in this market right now. More so than Snowflake doesn't anger the bears because they see that for what it is. It's just a bubble and a bubble type stock. Disney is, I mean, this company is, half the company's not operating. Like literally, the parks have been closed the whole year. ESPN didn't have sports for 6 months. And this stock is not just back to where it was in February. It's now broken loose of the atmosphere heading into orbit. And if you're someone that's looking at the state of the economy and then trying to make sense of Disney, you literally can't. And the biggest insight to that is that if you're a bull on Disney now, you understand that you got here because of Disney Plus. But to Savita's point, next year, you're not losing Disney Plus, but you're gaining back the parks. You're gaining back box office and movie theaters. You're gaining back full-fledged ESPN activity. So, like, that's the type of stock that I think is so emblematic of why it's been so hard to bet against the market this year. Now, if Disney hadn't launched Plus prior to the pandemic, which they just got in under, by a hair last December, if they hadn't done that, I don't know where this stock would be. But that's an alternate universe we can't visit. The one that we're in, everything that they did ended up working out really well for the environment we've had to live with. And now we're going to get back to normal, and Disney should rock.
Brenda, you own Disney as well. And to build on what Josh was saying about the genesis of why these picks were made in each specific sector, Bank of America says the stocks align with their themes for the year ahead. Value over growth, small over large, cyclicals over defensive, and ESG, plus factors such as positioning, our analyst 2021 earnings outlooks and versus consensus, and more. Brenda?
Yeah, I mean, I would agree. You know, if you look at the S&P, kind of beyond the top five names, there's still almost 200 names that are down on the year. So there are still a lot of opportunity. And I would agree with everything that Josh said about Disney. I mean, to step into these reopening plays, you have to be willing to step into a business that is depressed in many ways. But Disney, we think, is incredibly unique in that not only did they launch Disney Plus, but they've done a lot of very smart things to drive subscriber growth. And we also think that at a certain point in time, we are going to hit a little bit of an air pocket in terms of new content that comes out just because of the impact of COVID. And that's where I think Disney, again, kind of shines because their content is so timeless and the primary viewer are children who are willing to watch the same thing over and over again and never tire of it. So I think that's also a really important piece in our view of the Disney story and just what makes the company so valuable. And so then throwing in the potential or the eventual recovery and likely pent up demand for something like the parks business just makes it even more attractive.